Hello and good afternoon. Tom Morelli here with Wilco, and today I'm joined by Derek Long, COO at LoanPASS. Derek, how are you doing today?
I am doing awesome, Tom. Great to be with you.
Excellent. Truly appreciate you taking the time. So, we were just talking about actually the conversation we had the other day. And the
Mhm.
focus of this conversation is going to be around LoanPass and looking into, I'm going to summarize it as an AUS for non-QM and some of those other types of products. And I'll let you
Yeah.
explain that a little bit more here in a moment. But it just so happened that earlier today we were talking with a lender regarding wholesale and DSCR, and their number one wish list item was, man, it would be awesome if there was an AUS for non-QM and DSCR. So if that doesn't tee this up any better, that I don't know what else could. But
That's true.
Derek, you had mentioned that having an AUS for those types of products was part of the original vision for
Yeah,
LoanPass. Can you talk through what that initial vision looked like and give us some of that backstory?
sure. Sure. It actually goes back farther from that personally. The company that I founded back in 2001, around 2005, we were actively working on a non-conforming AUS. And it was a big goal of mine. And then 2007 happened. Half our clients went out of business. We sold that company to All Regs. And then 6 years ago, I first meet the founder of LoanPass, and they mentioned to
Mhm.
me on the call, yeah, we really want this to be an AUS. And I'm like, oh my gosh, this is my
Perfect.
chance. This was my goal 20 years ago, and here's a chance to realize it again. So that was the part of the foundation of LoanPass, is that we were building initially a pricing and decisioning engine, but we didn't want to just be a PPE. We
Mhm.
wanted to be a full AUS that was fully customizable, fully configurable, and could handle the portfolio lending type products that
Mhm.
just have been ignored when it comes to AUS. So that
Sure.
was really our focus. And so over the last 6 years, we've been building towards that with that
Mhm.
goal.
And I'm actually curious
Yeah.
because that's such a wonderful vision. What have been some of those roadblocks where you'd love for that to have been easy, I'm sure? What have been some of those challenges that you've had to overcome along the way?
Um, we needed to build up ourselves as a company with clients and all that kind of stuff. So we had to spend so much of our focus on the PPE side stuff. Like each year, as we were talking about our plans, some of my thinking was, okay, now we get to start on the AUS. And so it wasn't really the technical hurdle, it was building up all the infrastructure
Hmm.
leading up to it. Now we added little pieces as we went. For example, from our start, we've always had the ability to do stipulations or underwriting conditions, which is very unique for a PPE. So we can create custom messages and send them to brokers or loan officers or whoever. But that was just one foundational piece, and now we're excited that it was the beginning of last year that we finally brought in the ability to pull in a credit report, parse the data, bring it into our fields, and spit out underwriting conditions. So that was
Okay.
kind of the first time I felt like we had at least a demoable version of an AUS.
Well, I love that you mentioned that because it speaks to the due diligence involved with something like this, because
Yeah.
it certainly is a tread carefully, and it's not like you went into some AI app and just said, "Hey, build me a non-conforming AUS," and cool, hey, look
No.
at this thing. Like, you have had to build yourself up, like you said, as an organization, but as
Mhm.
well as your competency to ensure that you're accounting for all of those nuances in, what
Absolutely.
up until now have been treated as kind of those niche products, so to
Yeah.
speak.
Yeah, we
So,
needed integrations to LOSs like Wilco so that
yeah.
so that the data would flow back and forth. There's all kinds of elements to it.
Hmm. So now that the foundation is set,
Mhm.
and I know we're ready to get some of that juiciness, give us a little peek behind the curtain of what's going to be rolling out here in the
Sure.
coming weeks, months.
So I think the interesting thing that we found that I maybe need to explain first is when
Sure.
we've heard people say the term AUS and it means different things.
Okay.
Okay. And so for us, we've seen some companies that are working on some part of managing underwriting conditions or gathering data and calling it an AUS. For us, our vision has been basically take what DU and LP has been in the
Hmm.
conforming government space and duplicate that as much as possible with even improving it on non-conforming
Sure.
seconds, jumbo, non-QM, fix and flip, reverse mortgage. It doesn't really matter. So for us, it's the decisioning component that's custom to each set of guidelines, delivering underwriting conditions, and that gives you a DU LP like finding report, but making it custom for each lender that wants to use it.
Yeah. Oh, that's excellent. So where are you at in the life cycle here
Yeah.
with getting that out to market?
So we have two pretty well-known large non-QM
Okay.
wholesale lenders that have signed up with us as beta clients. So we're
Mhm.
actively going through the process. We meet with them every week, of building versions of this based on their guidelines, connected to their LOS, based on all the things that they are looking for to make sure that we're meeting both their needs.
Hmm.
So it's pulling in the 1003, pulling in the credit, similar to DU and LP in that regard. Part of our so the MVP version of that we expect to have ready by Q2. That's the
Excellent.
goal. But the long-term vision is to not stop there and go beyond what DU and LP does. We want to bring in the appraisal and make it
Okay.
another document that gets uploaded. We parse the appraisal data relevant to guidelines, eligibility, and things that would create conditions and spit that out. We want to build integrations to verified income and verified asset sources so that we're bringing in those numbers. And so
Hmm.
really what you're looking at is there's five elements of underwriting, which is the guidelines, the credit, the property, the income, the asset. We want to take all of that in, create the conditions, and what was really unique is combine that with the pricing. Because one
Hmm.
of the biggest disconnects with DU and LP is that the underwriting decision and the lock management and pricing are totally separate and sometimes get out of sync.
Yeah.
So
Excellent. So then, as you're going through the beta testing, what are you, but at a human level, what are you
yeah.
most excited about to get feedback on?
Um, how right now we're going through the process of how do you manage conditions? What do you want to
Okay.
see? What will they look like? How much can we automate versus what does an underwriter need to do? And so we're going through that with each of these beta clients and experiencing, different feedback. So that's been kind of an exciting, fun process. But just seeing it go through the process and being able to have it be a front end tool that
Hmm.
brokers or loan officers could use early on to get a very, just like they use DU and LP on the conventional space. I mean, it would
Yeah.
almost be impossible these days to find a loan that DU in the conventional government world where they don't use DU and LP, right? But
Hmm.
somehow we have gone for decades now of just assuming, okay, well, there is no option when it comes to non-QM jumbo, and that segment has grown and it's all been manual. So the ability to have that happen at the beginning, then have the underwriter use it 8 or 9 times as the loan is processed and as things change, just like you do with DU and LP, and then
Hmm.
even after the fact, because right now, unlike conventional loans where only 10% need to be audited, non-QM loans that go into securities, 100% of them have to be
Yeah.
re-underwritten. So it's two full cycles of manual underwriting that could be dramatically strengthened, improved, become more efficient, more consistent, all that kind of stuff.
That's huge. You can only begin to imagine what the ROI will be on and what seemingly an ever expanding market.
It is.
Uh,
Yeah.
so then, as we look to the future, you mentioned some of the places where you want to continue to expand to. Where do
Mhm.
you see all of this going? And like, especially in the non-QM space, DSCR, how that part of the market share is starting to really take off here. Where do you see that next level of opportunity?
Um, boy, it's pretty big. It's pretty wide open. For us, it's, correspondent investors. It's pretty much for us, if you have your own set of guidelines that is unique to you, that is yours, and you want to automate that decisioning, it could
Mhm.
be, like I said, it could be reverse mortgages, it could be jumbo and seconds and short-term financing, bridge and construction and all that kind of stuff. But banks, credit unions, IMBs, anybody that just wants to improve the efficiency and have control of those guidelines, because a good part of what makes LoanPass unique too is how easy it is to modify and reconfigure and customize and add new guidelines and do it very quickly without hard coding. So it gives that flexibility. So I mean, you want to hear my vision is LoanPass's portfolio AUS becomes as ubiquitous as DU and LP when it comes to the non-conforming space.
That's a pretty good mic drop to end on.
Yeah,
No, it's super incredible news, and kudos to you and the team for having that vision and staying true to your original vision and
thank
seeing
you.
that come to a reality. Is there anything else from that standpoint that you wanted to articulate while we're here together?
I think it's as we've talked to lenders about this, one of the biggest challenges they're having right now is finding underwriters who understand non-QM
Okay.
and then getting enough of them to handle all of the volume. So this becomes an answer to, you don't have to necessarily memorize every non-QM rule because LoanPass accounts for all of that. You can get somebody in faster, get them up to speed, and you can do way more loans per underwriter than what they're currently dealing with. So we all know the cost of doing a mortgage is
Yep.
somewhat ridiculous, and anything that can help drive those costs down while also
Yeah.
improving customer service and all that kind of stuff is only to the better. So we're excited about where this is going to lead.
Excellent. Love it. Well, Derek, truly appreciate you taking the time to join me. For folks who, because I'm sure there'll be some with questions or
Yeah.
very interested in what you've got, what's the best way to get in contact with you and the team?
Info at loanpass.io is the easiest email to reach out, or our website, loanpass.io. You can fill out a contact form there as well. That's probably the
Excellent.
quickest and easiest.
Well,
Thank
again,
you.
truly appreciate it. And for those tuning in, if you're interested in learning more about Wilco, our relationship with LoanPass, you can reach out to us at wilco.com. So, Derek, again, truly appreciate you taking the time.
Yeah.
Fantastic. And really excited to hear some of the outcomes of those beta testing that's happening. For
Thank
those
you
of
for
you
having
tuning
me,
in,
Tom.
yeah, absolutely. For those of you tuning in, we'll be seeing you again soon. Take care.
All right. Take care.